correction might look insignificant, but the damage that is being done here is much greater than what anyone realizes. For the last 4 months, the US stock market has been consistently making new all-time highs. That is up until one of Donald Trump's tweets wiped out $1.7 trillion in the market cap of the S&P 500, threatening a 100% tariff hike on China. A day later, Donald Trump tweeted that everything was fine, and the market rebounded as if nothing happened. This correction might look insignificant, but the damage that is being done here is much greater than what anyone realizes. Because if we zoom out a little bit, we see that although the stock market is at all-time highs in US dollar terms, it's making new lows when measured in terms of gold. In fact, it's hovering around its lowest levels in over 10 years. This divergence between the S&P 500 in dollar terms versus gold terms really began in early 2024. It accelerated during the first tariff announcements at the beginning of 2025, and it's now intensifying even further with the recent announcement. Now, historically, periods where the stock market is declining in gold terms usually coincide with periods where the stock market is also stagnating in dollar terms. This was the case in the early 2000s during the dot-com bust and the 2008 financial crisis. If we rewind a little bit further, we see the stock market was also declining in gold terms in the 1970s, which was a period of stagnation in US dollar terms as well. That's because most of the time, when there is a lot of capital flowing into gold, it suggests there is a flight to safety, which usually means that there are so much concerns in the market that capital is flowing out of the stock market. Today, that's not what we're seeing. Yes, gold is rising, but so are stocks. In fact, the stock market has completely shrugged off all the risks associated with tariffs. Not just the extremely high trade uncertainty that has resulted, but also the very low consumer sentiment that we've had since the beginning of the year that historically has been associated with economic recessions. But that does not mean that we should ignore the signal that we're getting on the stock market measured in gold.